So there you have it. Two good things, one neutral thing, and one bad thing about Fed cutting the funds rate by 50 basis points today. Now, you have probably heard that Fed cut the rate by 50 basis points just a few minutes ago, actually. And this is the first rate cut in 4 years. Now, it impacts you in two good ways. Let's talk about that. The Fed rate cut directly impacts home equity line of credit. So if you have a HELOC, you'll probably see on your next statement that the rate has gone down by 50 basis points. That's, of course, if it's an adjustable rate mortgage. If you have a fixed rate home equity, you will not see a change. The second place where you will possibly see an impact almost immediately is if you're in the market to get an auto loan. So auto loan are again kind of directly correlated with Fed funds rate. Since the Fed dropped the rate by 0.5%, you will see the auto loan rates go down almost immediately. The one place where you might not see the difference is mortgage rate. And that's something which is almost always misconstrued, is that people think that when Fed cuts the rate, the mortgage rates go down. In fact, almost seconds after the Fed cut the rate, I got several emails from my own clients saying, now that the Fed has cut the rate, can we look at the mortgage rates? Unfortunately, and I have talked about this several times before, is that the Fed funds rate has got almost no correlation with mortgage rate, at least not on the day of the cut. So in fact, the mortgage rates went up slightly today and not actually went down. So something you should know. However, the mortgage rates have been going down for the last 6 weeks or so. So if you're in the market to refinance or buy a home, of course, reach out to us and we can get you a competitive rate quote, which might be significantly lower than what you would have heard, say, 5 or 6 weeks back. And finally, one bad thing that comes out of Fed cutting the Fed funds rate is that it decreases the certificate of deposit or savings rate that you might be getting from your funds. So if you have your funds in a saving account or a CD account, you will see that the yield on that, the return of investment that you're getting on that, will go down. So the interest rate that they're offering on those saving instruments will go down almost immediately with most banks. So there you have it. Two good things, one neutral thing, and one bad thing about Fed cutting the funds rate by 50 basis points today.